Check 1 2, check 1 2. Ba-da-ba-ba-ba-ba. My oh my, what is happening here? What is happening here? All right, well, let's roll the intro and see what happens here. Boom, boom. Oh, hey, folks, and welcome back to Surely Sound Studio. My name is Martin. You can call me Marty. This is my show, so let's go. What's going on? Well, I don't know. There's a bunch of crazy stuff happening. We're getting shut down. Oh, AK was here, and then we lost him. And now he's trying to come back. Maybe he'll pop in at some point here if we try to get things figured out here. We're kind of back and forth trying to figure out what's going on. Not really sure. I had him. He didn't have me. Anyways, he might hop in here if he figures out what's going on. Tried a couple links, reload, unplug, plug back in type of things. But here we are today. What's going to happen? What's going to happen? Well, name of the show today is Local Stock Market. Top is near. Everybody wants to know what's going on. Everyone's asking, where should we put our money? Where should we put our money? Where should we put our money? Well, let's have a look at the charts. We're going to go over some things and see what's happening here. We'll look at the history, the statistics, what's happened in the past, and what is likely to happen in the future. Now, will it be exactly the same? Most likely not, but it'll probably be very close because it's been almost the same every single time. It's just a little bit different. There's just a different reason for the same thing happening every single time. So let's have a look at the charts. The first thing I do want to look at is, well, we're going to get into Bitcoin. I'm not going to really talk too much about Bitcoin, I don't think, this time, because everybody's kind of wondering about the traditional stock market. S&P closes at all-time high on Friday and is sitting right up on there. Still, S&P, we'll look at the NASDAQ, we'll look at the Dow Jones. We're going to look at USDT dominance. We're going to look at the Dixie. And the first thing I want to look at here is this right here. So long-term government borrowing costs are now back at levels seen during the global financial crisis. So this is the bond yield index pushing up into these highs. Now, this is the yield on the bonds that they are providing when you give your money to the United States of America and buy their US treasuries, buy their debt. Now, this is how the system works, folks. Basically, the world reserve currency, United States dollar, is exporting dollars for the world, for everything to go around, to continue, for people to borrow, and continue to build. Okay, so not a lot of people were trusting the US dollar in years past, 2018, 2020. Of course, a lot of things were happening. So people were pulling their money out of the United States and putting them in, well, obviously, the stock market, because stock market has been going absolutely parabolic since these times. Yes, we've had corrections, but ultimately it's just continuing to go up. And if we go to a weekly time frame on the S&P, it's going to be even crazier. Like, look at this. Okay, this is obviously where the money's going. Now, volume is actually tapered off a little bit, because that makes sense though, because that's very typical. As something gets more expensive, you're going to have less money, less people that can afford to go into it. So less money will go into it overall. When it's cheaper, you'll have more money go into it, of course. But the signs of a cooling stock market are here. Like we've been saying for the past, I don't know, couple months or so, even past couple weeks, 100 days, the next 100 days are going to be time to pay attention. The incentivization of people having their money in stocks right now is in a euphoric state. That is not good for a new investor. You do not want to be buying the hype. You do not want to be buying euphoria. You do not want to be buying when other people that have been in for years are like, oh my goodness, I'm sitting on max profit. I'm sitting on max profit right now, bro. Max profit. That's not when you buy. You want to be buying low and selling high. So if you're not in right now, you want to be looking at something that's, well, probably down overall on the scheme of things. Now, is Bitcoin the right thing to buy? I mean, you should probably do your own research, right? But Bitcoin, you have to remember, is the most liquid asset that we have. And so it's going to be your leading indicator, because you can buy and sell Bitcoin at any time, at any amount, any day of the week, any day of the year, any time of day. You don't have to have an open exchange. You don't have to have an open brokerage. You don't have to have an open bank. You can move Bitcoin anytime, anywhere, any day, anything, whenever you want to. So it's the leading indicator. Okay, so and as we look at Bitcoin right now, it is now down. Let's get a precision measurement here. Currently sitting down just under 50% from its all-time high, and just a few weeks ago was over 50% at just under 54% down from its all-time high. So if you're somebody that's looking to put their money somewhere, you do not want to be buying tops. You want to wait for somewhat of a correction. And what we said last week is if we break out of this, we're going to go a little bit higher. But you have to look at this. Every single push up is getting smaller. You see that? Push up, push up, push up, push up, push up. Will this continue to go a little bit further? It could. But for confirmation of the end of the US dollar here, you're going to want to see another massive push that's bigger than this one and bigger than this one. The trend right now is that the pushes up are getting weaker. And that's what we see in the RSI, in the strength. Every time it pushes up. We're just barely getting to this dotted line here. And in the past, we were over the dotted line. In the past, we were way over the dotted line. Now you see, the trend is what's happening here is ultimately a correction is due. Okay, and that's all it's going to be, is a correction. Is it going to be a crash? Is it going to be a bear market? Most likely not. With the debt that the United States has, it's going to just continue to, because of math, be forced to print money to pay their interest, right? When interest is the majority of their payment over military spending, over infrastructure, over all the other things that cost a lot of money, your taking care of their citizens. Obviously, they're not doing that. Lots of very poor living standards coming to the West because they're paying debt more than anything. So they don't have any money. Even though you pay your taxes, all you're doing is paying yesterday's debt. You're paying Nixon's debt. You're paying George Bush's debt. You're paying Obama's debt. Okay? You're paying Trump term one's debt. You're paying Biden's debt. You're all paying yesterday's debt. And it's going to get worse because of compound interest. Compound interest makes the investor rich, but it makes the person who's in debt poorer. And unfortunately, the United States is in massive amount of debt. Now, it's not the United States alone because they export their dollars. So Japan holds that debt. China holds that debt. Canada holds that debt. Other countries hold that debt too. But a lot of those countries are now looking to sell US treasuries to strengthen their own currency, because clearly we're going through a phase of financial uncertainty, unprecedented times in the financial system, which is ridiculous, because if you know anything about math and you just look at the numbers, you're like, well, yeah, this is obviously unsustainable and has been for 50 plus years. But here we are, still doing the same thing, moronically, just saying, we'll raise the debt ceiling. It's okay, we'll worry about it tomorrow. We'll let the next generation deal with it. Like, come on, you guys. So they're purposely trying to make people softer and dumber so that they can just offload the debt onto them. If you haven't noticed, that's what's happening. Okay? So again, where do you put your money? Well, likely, what happened when the 2008 financial crisis happened, the housing prices went down, stock prices went down, prices of assets went down because the price of the dollar, the value of the dollar, the strength of the dollar went up. Okay? They always move in correlation or opposite to each other, right? If we're pricing something in dollars and the dollar goes up, well, then that asset's going to get cheaper. So now this here is roughly, in between 4 and 4.5% on a US Treasury. They're pushing the bond yields up to incentivize people to buy them, saying, we will give you more money if you give us your money. Okay? Now, I know what you're thinking. What do you mean? They're going to give you more money? Why, they don't have any money? Well, that's right, they don't have any money, but they can print money. They can print money, and it's not backed by anything. It's not backed by gold. It's not backed by anything. So we have allowed this as a collective. We have allowed this to happen. Nobody's standing up and doing anything about it. So obviously they're just going to keep doing it. But we have allowed them to do this. It's making living standards worse because things are getting more expensive. Every time they print more money, it devalues the dollar, makes everything more expensive. Living standards get worse. Okay, and that's another thing that they're trying to do. They're not trying to make things better, especially in Canada. Eyes open to this one, folks. They're not trying to make things better. They're openly saying they're not trying to make things better. They're trying to make you be okay with a lower standard of living. It's not even like, hey, we're gonna try and do better. No, we're gonna lower the bar and we're gonna make you be okay with it. You should not be okay with that. That is a massive red flag and a hard no for me. I am raising my living standards because of the education that I have, because of I understand what's happening, and so I'm positioning myself properly. And I'm on here trying to tell people what's happening, not my opinion. I have no opinions. There's no point in having an opinion because I'm a statistic-driven thinker, and what is. It is what it is. It doesn't matter what you think or what you care, what you want to happen. What's happening is what's happening, and you need to get a grasp on it or you're going to be left behind. Plain and simple. Oh, we got AKs in the chat. What's up? Okay, well, sounds like it wasn't working, but AKs in the chat. Got the chat up. I don't have the chat up. There it is over there. Collapse of 2008. This didn't happen that long ago. Yeah, it's funny. It didn't happen that long ago, and here we have... and it's gonna continue to happen faster and faster, right? Because compound interest is going to push the likelihood of things losing control quicker and quicker as the debt rises. It's just simple mathematics. It's just simple, right? If you have compound interest, it's just going to continue to explode, balloon faster and faster. Yield curve is going to get out of control. It's already out of control. It's already beyond out of control. Yet they want to try and distract you with other things and just tell you that it's okay, but it's not. We still have the red ring on. We still have the red hat on. I do not think that we're out of the bear market just yet. What's happening with the stock market is all borrowed money. So when people start to realize, and the whole thing about trading is you don't want to be the last guy. You just don't want to be the last guy. So when things start to shift, they start to shift fast, because everybody that knows, all these big money investors, all these hedge funds, all these people who are managing large amounts of money, they are just kind of waiting. Okay, how much longer? How much longer? They're just like the guy on first base. You know, he's gonna steal that base. He's kind of like, oh shit, am I gonna go? Am I gonna go? You know, he wants to be on that base. He wants to be safe. He knows that if he's in the middle, he's gonna get tagged out. He's safe on the base, but he also wants to advance to second. So he's kind of like, oh, he's looking to steal. Oh no, he's gonna go back. Okay, and the pitcher throws the pitch, and then he's off. Right? He's going to take that risk. Is he going to make it? Well, he just doesn't want to be the last guy, but he wants to be safe. That's the whole point. Everybody just wants to be safe. They don't want to lose value, right? When the stock market goes down, or when the markets go down in general, you can short. That's how you maintain safety. It's okay. You make money as the price goes down. It's all good. No worries. But you don't want to be the last guy, because the last guy ends up paying the bill, right? Everybody dines and dashes while the last guy pays the bill. Shit. Right? So this is kind of how the financial system works. It's a shit show, absolute shit show. And unfortunately, no one's going to tell you this is how it works. You're going to have to do your own research for yourself, for the most part. And so I'm on here. I figured it out years ago. I've been doing quite well since then. I've helped a lot of other people do quite well since then. And you know, that's all you got to really do is start paying attention. So basically, long story short is, as these yields go up, more people are going to move their money into US debt. So therefore, when the stock market starts making smaller highs, you start to see less gains. They're looking at an annual return. Everything that in the broad markets is annual return, APY, APOI. What are we going to get per year, right? And so in an area like this, when you're in an actual bear market, people are pulling out of stocks and going into bonds, right? And as the bond yield goes up, it's incentivizing people to put their money into bonds. And what happened in 2008 when the bond yields were this high is everybody took their money out of the stock market, out of the housing market, and they put it into bonds. So it's like when people say, oh, the US dollar is going to crash, or the US dollar is going to, you know, not be the world reserve currency anymore, or whatever. Maybe one day. I mean, I think Bitcoin is already the world reserve currency. It is used for global trade. It's accepted globally. So the United States dollar is still, quote, the world reserve currency on paper. But obviously, if you look at the numbers and you watch the books, Bitcoin is the world reserve currency. Okay, so you're gonna want to learn about it if you want to have any pull in the future. Because if you just sit around and wait for your bank to do it for you, then guess what? They're just going to say, it's okay, just keep putting your money in the bank and we'll give you whatever it is that they're going to give you. Not enough. Doesn't matter what it is, it's not going to be enough, because they need to make money for themselves as well. So they're going to be taking the profits for themselves. They're going to be retiring early, and you're going to be paying for their retirement, right? So I've been telling this to people for years now. The banks are unnecessary at this point. Completely unnecessary. All you're doing is paying somebody else's wage to do something that you can do yourself with not that much really education or attention whatsoever. It doesn't take that much, especially now that you have AI and AI agents. And I don't know if anybody really understands what's happening with the internet right now, but when I talk to people in public, it really seems like people are living even just like 10 years ago. The internet is completely different even 6 years ago now than it was 6 years ago. Like, insane. AI agents, do you even know what an AI agent is? If you don't know what an AI agent is, you should really understand what an AI agent is. Do you ever wonder why some videos on TikTok or, Instagram or Twitter or whatever just like blow up, but they have like very little like actual real looking engagement. They have engagement, but it's kind of like very questionable, and you're just like, what is going on here? Why is this? And you watch these videos and you think to yourself, how did this happen? You know, because your subconscious gets it, but you don't get it. But your subconscious is like, yeah, red flag, this doesn't look right. Well, it's because people can hire reply guys, people can hire AI agents, they can hire all of these people that are offering to have bots do whatever you want to do on the internet. Bots can become profiles, and then profiles can constantly be on the internet, arguing with people, replying and sharing and doing all these things, engaging, which the algorithm thinks, oh, okay, look at all this engagement. So the algorithm continues to push it. And you have to understand that it's all artificial. From social media to finance, it's all artificial. The stock market's propped up on borrowed money, artificial. A lot of people that are influencers are propped up on bots. Influencers that are on TikTok and all these things, like it's all fake. It's all bot, pun intended, bot using money, and bots that are doing it. Okay. And there's companies that you can hire. And even if on that note, even look at like live protests that you can hire crowds. Like you have to, the whole world is artificial. Not very much intelligence, a lot of artificial, very little intelligence. But you don't know till you know, right? A lot of people just see this stuff and they're like, wow, that person's doing really well, or wow, that person's this and that. It's like, no, they just paid for it, man. They just paid for it. I've been following a lot of people. I know I'm in the know about a lot of things that happen, whether it's in Bitcoin, crypto, finance, music, social media. I pay attention to a lot of things. I have seen people start a YouTube channel. They're former well-known in other channels, but then go off and make their own channel. And then I see the day, literally within hours of them starting their channel, 50,000 subscribers. They don't have 50,000 subscribers. They just started the channel. There's no way. And it's funny because literally the day they started, it's sitting at an even 50,000. So that's a zero for them, right? Because they just paid YouTube to start them with 50,000 subscribers to make it look like, you know, it wasn't even, why wouldn't you put like 26,401 or 26,000, you know what I mean? Like 50,000 subscribers on the hour that you made your YouTube channel. Come on. You don't have to be a genius to realize that that's artificial. Okay. Artificial intelligence. Very interesting time, eh, folks? Very interesting time we're living through here. Everything's artificial and nothing's intelligent. Not good. But anyways, this kind of thing is what's going to make, and for instance, if anybody, I mean, I'm not a financial advisor. Nothing I say or do should be taken as financial advice. I'm just a guy on YouTube doing this for entertainment purposes, right? I like to entertain. And that's all I'm doing. I mean, take it for what it is. But honestly, do your own research because it's all out there. There's nothing hiding behind anything anymore. Everything's out there. You can find anything you want to, whenever you want to. So I highly encourage you to stop scrolling mindlessly and like dig in and do some reading and some research and figure out what's happening. Especially if you find yourself complaining about things, or you find yourself feeling unhappy about things, or confused or unsure about what's happening. You know, if these unprecedented times are making you feel negative or, you know, used or, you know, just not well in general, then maybe it's time that you did your own research. Stop relying on other people to tell you what's happening. For instance, if the sky is falling, you don't need somebody to tell you. Okay? You can see the sky is falling. But for whatever reason, everybody thinks that they need to, oh my goodness, what's happening? What's happening? What's happening? What's happening? It's like, what? Go look at what's happening. Is there something happening down the road? Go look at it. You don't need to always look on your phone, because the second you go and look on your phone for something, all you're going to get is somebody else's interpretation of what's actually happening. Whether they're trying to do their best or not, Doesn't matter. Most of the time it's just for engagement. So they will purposely do it wrong because people will be like, well, that's wrong. More people engage with negativity, more people engage with incorrect information than they do with positivity and correct information. So you have to understand, first of all, if you're going to look on the internet for any sort of information, it's probably wrong on purpose, because it's going to create controversy, which is going to say to the algorithm, hey, this is popular. The algorithm doesn't know wrong or right. The algorithm just knows, are people talking about it? Is it getting engagement? Are people spending time on the platform? That's all that the algorithm cares about. Okay? And so the people that programmed it so that you spend more time on their platform. It's profits over people. They don't care between wrong or right. It doesn't make any difference to them. All they care about is money, and they make money for the time that you spend. When you give them your time, they make money, because that allows them to sell that time to people who are searching to put ads and ad revenue. The whole ad revenue is what makes everything go around. The internet entirely goes around because of ad revenue. So that's kind of what you got to pay attention to, and understand that whatever you're looking for, you have to just remember, okay, because a lot of the time I hear people like, dude, can you believe this? How is this happening? This and that. It's like, well, no, neither do you. You just said it, right? And instantly, if you find yourself saying the first words out of your mouth are, I can't believe this, or I don't believe that, well, then you're probably right. Your subconscious knows what's happening. Don't allow society and these screens to manipulate what you already know inside you. Okay, your soul gets it. But everything out here is made to confuse you, because if you're confused, then you're going to spend more time and you're going to rely on other people. And that's what it's all about. But don't rely on other people, because they're all just going to burn you. It's profits over people, and it has been for ages. So anytime you're complaining about something, oh, why is this? Why is this? It's because inefficiency is profitable. Okay? There's no such thing as being efficient and then being profitable at the same time. It doesn't work that way, because if you get a job done, it's done. But if you get a job, for instance, look at your highways. Why does it take so long to make those highways? And why are they in certain steps? Why do they do them in groups, in certain stages and all this? It's because, first of all, nobody can fucking figure shit out all at once. So they're like, okay, we have to take this a step at a time. I get it. There's a lot going on. That makes sense. But at the same time, you also have AI. So you shouldn't really be able to, that shouldn't be a block anymore. Okay. If you know what you're doing, there's people out there that can figure it out. Those people don't get the jobs because too efficient doesn't work. And many people know this too, especially if you have like some sort of union job or, government job. It's like the new guy comes in and he's doing really well. He will get told to slow down. He will get told to stop. He will get told to, dude, you're making the rest of us look bad. You can't do that, right? We have a standard here, and you're way too high. You're way too above the standard. And that if you work like this, then it means the rest of us are going to have to work like this. And guess what? That's what puts an economy in the shitter, when people don't want to do anything and everything becomes, oh, this and that. The economy is built by the people. And if the people and the unions are trying to protect people from adversity, you're going to get weaker. Over time, your economy is going to get weaker, and then your children are going to get weaker, and then a country is just going to get taken over by other people. I'm sorry to be the one to tell you this, but you're going to have to stand up. If you don't stand up and fight, your kids are going to have to stand up and fight. So what's it going to be? You're going to send your kids into a war because of your, the whole time you're trying to be, oh no, I don't want to deal with anything. Do not engage. Yeah, right. If somebody steals something from my store, I'm beating the fuck out of them. You don't do that. I remember back in the day when I was in school and kids would try to steal from the mall because our school was right across the street from the mall. So all the kids are in the mall. Some kid would try to steal. The security guard would just, you're going down. And then freaking, shoot. Fucking flying missile, just take the kid down. The kid smashed to the ground for stealing like a chocolate bar. And the kid just gets wrecked by the security guard. That was great. Those are great days. Guess what? Nobody else stole for at least a couple weeks. And then the same thing would happen again. But it's like nowadays, if somebody steals something, the security guard literally says, the security guard's job is to stop other people from doing things and just say, nope, do not engage. Just let them go. Like, are you fucking kidding me? Do you not understand what the trend you are creating, where that trend leads? Come on, you guys. Give your fucking head a shake, because that's unbelievable. Nobody gets it though, hey? Nobody gets it. All right, this isn't I'm going off here, but Let's get back to the charts. Getting out of control here. The security guard's about to come and take me out here. But anyways, what's the question? What's the question? The local stock market. Local top. So pay attention to the wording here. Local stock market top is near. Because when it comes to the stock market, there's many tops. But then the next one is higher. And then the next one is higher. And the next one is higher. Will this one come all the way back down here? I mean, we got a high volume node down at 4,000. Lots of volume down in here. We already tested this high. We never tested this high. We got a little bit of a gap in here, inefficiency. So do we come down? I mean, I had this blue line here because I expected us to come down here then, and we never did. So, you know, do we come down to a $6,000 S&P? I would not be surprised. I would not be surprised. Oh, pardon me. I would not be surprised whatsoever if the S&P went down to $6,000. That would be a total healthy move. And we would also expect us to come down into the red a little bit. And if you see stock market in the red, that's when you want to probably do some buying. Buy in the red, sell in the green. Long term, you know, if you're just looking to build wealth. I mean, I personally have been sitting on the sidelines since December, November last year. I've been open about it. I was selling. I don't do traditional stock market because the traditional stock market is yesterday. I'm looking to invest in tomorrow because I am looking for the next 100 years. The stock market was the last 100 years. I'm looking for the next 100 years. I don't care about showing up to a game late and trying to get a little bit, you know, basically at this point, the way I see the stock market is it's a game in the stadium that's over, and the people that are still there are just trying to pick things up off the ground that the other people that were there for the show dropped. Maybe somebody dropped a couple dollars here and there when they were, you know, trying to get some money out of their pocket or whatever. So you're at the stadium still, but the game's over. The game is over. The majority of players have left the field. The majority of people watching have left the field, left the stadium. You're just sitting there trying to pick up the scraps as far as I'm concerned when it comes to the traditional stock market. Now, if the stock market becomes tokenized, which they're trying to do, and put on the blockchain, which it will, because obviously that's where everything's going. No one is willing to not be able to make a trade on a certain day because of something being closed when you can just use Bitcoin, right? So those who are educated don't bother with the stock market because the stock market might crash on the weekend. And then what? Well, you're gonna phone your broker, you're gonna use your app, and the brokerage is gonna be like, yes, your order is put in and it will hit the books on market open. It's like, well, guess what? How many orders are lined up in front of you, right? You don't want to be the last guy. You don't want to be the last guy. So stock market to me is a big red flag. I'm not interested in any of this type of stuff. This doesn't make any sense to me. This just makes sense to people who rely on other people to do things for them, which I'm not that kind of guy. And this I would not be buying this. I don't buy this. If you were in years past, you're DCAing out, and then you buy here, you buy here. Maybe we buy if we come back down into the red, but I don't know. Traditional stock market, it doesn't look too good. NASDAQ on the daily didn't take that high. So maybe we see a little bit more. I mean, but also, like, look at that money flow in. Red's always been a good buy, but for how much money, for how big this red wave was, I think, maybe a little bit more time in the red, especially with all this stuff lining up about the yields and everything else that's going on with the U.S. debt and uncertainty just in general. And obviously, like, the Dixie actually looks pretty good, which is this U.S. dollar strength index. It's kind of been, it had a high December 24, and it's come down, but it's gone pretty much sideways. But it is in a uptrend where we broke the high, held the low, broke the high, held the low. So far we've held the low, and the EMAs are starting to round out and starting to tick up. Sure, the quick ones are starting to tick down a little bit here, but they're all still really tight together too. So basically, as long as we hold this low, US dollar is looking strong. US dollar is looking strong. And actually, on that note, for the Canadians, I'll show you a chart here that might make you feel a little bit better about yourself. Canadian dollar to US dollar. Oh, look at that 618 bounce. And she's pumping. She's pumping. So I was looking at this a little while ago, and actually when I was in Seattle, I was paying absolute top dollar for the US dollar and Canadian dollars. So I was getting as raped as as any Canadian has been since April 25. Whatever, had a good time. It's all good. I don't really care. Money doesn't make any difference. It's just a freaking made up system. And if you understand it, then you profit from it. But anyways, from our low to our high, we now have a golden pocket 618 retracement here, and we are now bouncing from it. So basically this is our area of interest up in here. Will we take these highs, or will we get rejected? The next thing to look for on the US to Canadian dollar is going to be 72 cents. 72 cents, 73 cents up in here. If we see a rejection here, that's no bueno for Canada. Bye-bye. If we hold strong and continue to push, which it kind of looks like we might, but of course, if everybody piles into U.S. treasuries, then Canada's going to get left behind. Canada needs to start exporting its resources if it's going to compete with the rest of the world. And I get that a lot of people don't think that's the right thing to do here in Canada because a bunch of hippies and protect the land and stuff. It's like, okay, you're going to have to find out some other way to go about this, because if you just sit back and go poor trying to protect your land, somebody's going to come and take it over. So if you don't want to cut down the trees, you're going to be living in them. Pick one. Do you want to live in a house? Do you want to have nice things? You're going to have to cut down a few trees. Now, right now, we have the chance to regulate the amount of exports we put out there. But if we just try to cut it all off and not do anything, for whatever reason, it's going to make the quality of life in Canada get lower and lower and lower to the point where we're all living in the rich people will leave, and we're already seeing that happening. People with money will just leave. People that are educated will just leave, and everybody else will be stuck here, and they'll have nothing. And then guess what? There'll be multiple countries that are willing to come and take us over, and they'll just come and take over. And then guess what they're going to do? Export the resources. If we don't do it, somebody else will. So now's your chance to at least regulate it. Don't go overboard with it. Keep it somewhat, humanitarian. Obviously, we need Mother Earth. Okay, obviously it's our host. We obviously need it. But the way that the world works, not my opinion, if I was in charge, we'd all be on a Bitcoin standard and our money would get stronger. Therefore, we wouldn't have to export our resources to the extent that we do. But my opinion doesn't matter. The world that we live in is global trade. The financial system is global trade. So the countries that are doing the best are the ones that are exporting their resources. Sounds terrible. I get it. I don't like it. Doesn't matter though. That is what it is. Okay. All I am is just one. I'm not even a pawn on the chessboard here, folks. Neither are you. So, but if you educate yourself about this, and hopefully in coming years, we vote for, with our dollars, to do the right thing, then we can still save ourselves. But if we don't, and we're going to be all living in the bush, those that are still here are going to be living in the bush, everything is going to go to shit, and some other country's just going to come over and they're just going to turn it into a wasteland. So what would you rather happen? Would you rather sell a little bit so that we can stay strong and then actually protect what we still have? Or would you rather try and hold on to it as long as you can to the point where you're in the poorhouse and then somebody just comes and takes it all and then turns it all into a wasteland and you lose it all? At this point, the way I see it is that we still have a possibility to have a somewhat of a humanitarian approach against, overlogging, underlogging, whatever resource you want. I get it. Like, you don't want to do too much, but you can't do too little. You simply can't, or else somebody will come and do it for you. And they won't give a shit because it's not their home country. They weren't born here. They don't care. It's just money to them. So what's it going to be? Definitely time to pay attention. This isn't about that, though. This is about the stock market. US dollar, USDT, dominance. Also, just sideways for quite a while, actually, surprisingly enough. But high volume node currently on top of the high volume node, currently consolidating on top of what was previous resistance, has now become support, potentially higher for USDT dominance, which also makes Bitcoin probably go down a little further. And of course, with the US treasuries being more incentivized to have a return, also probably have Bitcoin go down. Basically, everything is still pointing to the next 100 days are not going to be good for assets. Going to be great for people who are looking to buy, but not today. It's coming soon, but not today. So watch a bunch of people flood into US. I mean, this is going to be, if you don't know, the bond market is kind of it is what delegates your mortgage interest rates. So with the rise of the bond yield, it'll also bring up the interest rates. So how long can the US people afford to pay the interest on their mortgages? So that's what we're going to have to pay attention to, because they can only push the yields as far as they can until people start foreclosing on their homes. And they don't care about people. They will take it all. Everything is a collective. So the high leverage people will start to fall first, and then slowly the medium leverage people will start to fall. And then that's when they will start to be like, okay, we need to pause. We can't push rates any higher, or we're going to lose our entire middle class. Or maybe that's what they're trying to do. You ever think about that? Maybe they'll push it too far. Too late Powell. What was that his name? Too late Powell, right? When it's funny how people are blown away by the financial decisions, thinking that the people who are making decisions have their best interest as like our best interest in mind. They do not. They do not care. They don't want a middle class. They want a upper class, or just a regular class, and a serving class. Okay? That's been the goal of the rich families for ages. I don't know if you ever wore like really fancy clothes, but it takes like another person to help you put them on. You can't do it by yourself very well, at least it's kind of hard. And so there's a reason why the rich class, there's many reasons, but there's a reason why the rich class want to have a serving class, because all the things that they do, all the things that they wear, all the stuff that they have needs people to maintain it, and they don't want to pay. They're cheap. They don't want to pay a middle class wage. They want to pay, so they're trying to make you lower your standards so that you can become serving class. You don't want that. You do not want. You do not. Yeah, it's true. See, you chopped a tree down, you can plant 10 more. It's definitely possible to do properly. But the only people that are going to do it properly are the people who care about the country. The people who don't care about the country, when it comes time to, they're just going to come in and freaking turn it, they're just going to, you see, hey, there's a little guy. Yeah, keep going. He'll move. See, he moved, right? Like, they don't care. 10 points if you can guess what movie that's from. But it all to me kind of just points to the same thing. Like, Bitcoin, we are close to the bottom, but I don't think we're at the bottom. I was calling 42K since November. Will we get there? I wouldn't be surprised if we do. But it's, we still have about 100 days or so to, less than 100 days where it's, the clock is ticking. Because all they can do, they can only push it so far before things start to fall apart. And If you look at Benjamin Cohen's now on day 1,363 of the cycle, note the last two cycle bottoms on 1432 and 1436, right? So 80 days, 80, 90 days here. Still, he's seeing the same thing as far as past performance, past cycles go. This is where you're going to want to pay attention. Don't fall for the bank shit. Do your own research. And the more research that you do, the more research that will start to be done for you algorithmically. That's what I love about the internet these days, is what you pay attention to, it will continue to feed you. So when you start getting into this type of stuff, you just start learning more. You stop seeing you start seeing less and less stupid, pointless dopamine hit videos, and you start to see more and more meaningful information that can actually change your life, information that can actually help you grow and densify your brain and create more activity, open up new neural pathways that you never had before, build more neural pathways that you've never had, and get smarter. And unfortunately, it sucks, but stupidity affects the people around the person, not the person. The person that's stupid doesn't get it. It's the people around them that get affected by it, just like death. Death is like stupidity. The people that die don't feel it. It's the people around them that feel it. So be considerate and try and up your education for everybody's sake. All right? And AK, if you're still watching, are you coming for some GT? Should we get some GT going? Because, geez, I've already been going for about an hour. Time flies when you're having fun, don't it? And that's kind of all I really wanted to say, because this video is just going to be referenced in, I don't know, the coming days and weeks, and I'll be like, oh, remember when the stock market was at an all-time high, and I was like, the top is near? Remember when I said that? It's all just documentation, folks. Documentation, so we can get clarification, and also, what's the word I'm looking for? I need to be, what's the word I'm looking for? I'm not, man, drawing a blank here. It's brutal. I haven't even smoked anything today. It happens. I was thinking about a bunch of things, but basically, held accountable for my actions. I document this stuff so that I can go back and see when I was right, when I was wrong, and how, what I missed if I was wrong, and how I can improve. Accountability is the word I was looking for. So whether I'm right or wrong, this was published on this day. Take it for what it is. I never delete anything from my YouTube channel. It's all there. I never plan to delete anything from my YouTube channel, because I'm not the kind of person that just makes a bunch of content and then shares it when I'm right. I make the content, I do it live for people to see, so that I am held accountable, and that'll also help me grow. So I'm trying to grow as well as trying to help people along. But just look at the Dow Jones, look at the NASDAQ. Everything is hovering at or at an all-time high. Money is flowing out. Bond yields are going up. It's incentivizing people to put money in US debt. It won't last forever, but it would very, very well could create a selling frenzy in assets. And that's when you want to buy. Okay, so if you're looking to buy a house, if you're looking to, trying to figure out what you're doing here with your money, now is the time to pay attention. I've been saying this for a while, but the next, we're getting down there, less than 100 days now is where your chance is going to be, because it's not going to last forever. Every single crash, every single correction has lasted an average of 2 weeks to a month, and things are right back on track to where we go. Print more money, which is not going to end. So when you're trying to figure out when to buy, you need to be paying attention. Now is the time. With that being said, I wish you well. I wish you wealth, but it's on you, and you can do it. Or of course, like and subscribe to the YouTube channel, and I'll help you along. I'll hold your hand. I'll try and do it with a smile on my face and make you laugh as well. We're all here together, folks. And of course, acknowledge the source. Okay. I love you. Peace. I recommend putting your opinions aside and learning how to think logically.